Foreclosure victims are getting another shot at home ownership. The waiting period is over for a lot of them, allowing them to apply for loans and buy another house. Our Joy Wang explains what they'll need to have to make them a viable candidate for a mortgage.
Those who lost their homes during the Great Recession may be eligible to buy again.
Conforming loans have a time frame of 7 years where you basically can't get a conforming loan during that period of time if you've gone through a foreclosure.
But you may qualify for the Federal Housing Administration loan in a shorter amount of time, 3 years after a foreclosure.
A conventional loan would be like 20% down, and it is a typical loan. FHA is special financing.
And you need a good enough credit score to qualify.
Banks and institutions are looking at credit like they've never looked at it before.
To qualify for an FHA loan, you want to have a credit score of at least 640 with 3.5% down payment. You'll also want to have some money in a savings account or in an IRA for reserve funds. That's money that you have after your down payment left over in case of emergencies.
The better your credit score, the better your interest rate.
When you want to purchase a home after a foreclosure, as long as the waiting period has passed and you've reestablished credit and showed that you can repay a loan, there isn't really much of a difference between financing someone who has never had a foreclosure.
And there are steps you can take to raise your credit score.
One thing that these organizations like the Center for Financial Health or a lender can help you do is to look at your credit reports and see if there are mistakes. Are there errors that are reporting in some way which hurts your credit worthiness?
So you can get a better mortgage. Joy Wang, Fox 47 News.
More advice on rebuilding your credit: budget carefully and give up luxuries to make sure your bills are paid in full and on time. Getting a small line of credit from your bank will also help.